Welcome back. Now we're on worksheet 2. Hopefully you've tried this on your own, and now you're just back to check your answers and go through it with me. I will put an answer key out there too, so if you just want to check your answers, you don't have to watch the whole video. All right, so I've got my statement of net income and my balance sheet for November 30th, 2019. So we're doing the following year. I've also got my other information, and I've got my blank statement of cash flows. So I'm going to go ahead and get started. I'm going to start with my net income, which I'm taking from my 2019 net income, $472,500. Okay, and then now I have to add back my non-cash expenses. All right, I got tricky with you. I didn't provide them here. So now we have to figure out what we want to add. So I'm going to go back, and my first non-cash expense is going to be depreciation. So I'm going to put in here depreciation expense, and I'm going to add back my depreciation expense of $25,000. All right, so the next one is amortization expense of $10,000. So I'll put amortization of $10,000. And you know what I'm going to do is I'm going to copy this over because we're going to want that. Here we go. So we'll put this down here. Sorry, I should have done this on my own time, but sometimes that's how it shakes out. All right, and then let's go see if we have any other non-cash expenses before I got distracted by a bright shiny toy. All right, now we have a gain on the sale of equipment. We know it's a gain because it's a negative number, which means it's a negative expense, basically. So, and that's 15,000. So I'm going to put, I'm going to go over here, gain on sale, and I'm going to subtract the 15,000. Remember, we add a loss and we subtract a gain because the gain increased net income, but it was non-cash. So we need to subtract it from net income. All right. That appears to be all of our non-cash expenses. So now we're going to look at the difference between current assets, or the changes that occurred within current assets and current liabilities. So I'm going to take current year, 2019, and subtract the balance in prior year, 2018, to tell me how much I increased or decreased. And I'm going to just copy this formula for all of my current assets and current liabilities so I don't have to do it later. Saving time. All right, so my accounts receivable increased $100,000. So I'm going to go back over here, and I'm going to put in accounts receivable. And it increased $100,000, so I'm going to subtract. Right here, increase current assets, we subtract. All right, then I'm going to go, and my inventory increased by 2,000. So my inventory increased, so I'm going to subtract $2,000. And my prepaid expenses decreased $6,000 year over year. So prepaid expenses, a decrease, I add. So I'm going to add the $6,000 because it decreased. All right. That appears to be it for our current assets. So now let's look at our current liabilities. The first is accounts payable. Accounts payable decreased $40,000. So I'm going to type in accounts payable, and it decreased. Did I say decreased? Decreased $40,000. So when I have a decrease in my current liabilities, I subtract. So I'm going to say negative $40,000. And I have an a decrease, a $4,000 decrease in interest payable. So, and a decrease in current liabilities means I subtract. So I'm going to subtract $4,000. And finally, the last of my current liabilities, income taxes payable, increased $6,000. So income taxes payable. If I increase current liabilities, that means I add. So I'm going to add the $6,000. All right, now I'm going to add everything up, starting with net income, to get my cash flows from operating activities, which is $358,500. And it's positive, which is awesome. But if you remember, last year my cash flows from operations were like 800 something thousand. Let me see if I can find those easily enough. I have too many spreadsheets open. So last year my cash flows from operating activities was 841,800. This year it is 358,500. So it's still good that I have positive operating cash flow. But if I was a manager, I'd look at that. I'd go, wow, my cash flow's more than halved. That may not be a good sign. So I might want to go ask some questions. It may be fine. You don't know. But I'd ask some questions, and I guess that's the point. All right, so now let's travel down to our cash flows from investing activities. So for that, I'm going to have to go to my other info. The first thing I find out is I sold a piece of equipment with an original cost of $100,000. Equipment has accumulated depreciation of $60,000 and was sold for $55,000 cash. So the important thing here is the cash. I debited cash, $55,000. So I'm going to call this proceeds from the sale of equipment and positive 55,000 because I debited cash. Then I'm going to go to my other info and I purchased a piece of equipment for $20,000 cash. That means I debited equipment and I credited cash. So credit to cash is a decrease. So I'm going to put purchase of equipment and negative 20,000 because that was a decrease to cash. So my investing activities, I had cash provided by investing activities of 35,000. I had a net cash inflow from investing activities of positive 35,000. Okay, cool. So now I'm into my financing. So I find out I issued bonds payable for $500,000 cash. I will put proceeds from the issuance of bonds. When I issued the bonds, I debited cash, credited bonds payable. There may have been a premium or discount, but I got $500,000 cash. So I'm going to add that as a positive. Now, really quick. My cash flows from operating activities went down from 800,000 something to 300,000 something, and I issued bonds to raise additional cash. Now I'm really going to go answer some questions. It looks like I may be trying to issue bonds to make up for a shortfall in operating cash, which would concern me. Maybe not. Maybe when I go ask questions, I'm going to find out we issued the bonds so that we could build a new building, and it's totally coincidental. So I'm not saying it's right or wrong, or it's good or bad. I'm saying if you start seeing things like this, ask some questions. Find out. All right. So the other thing under financing is we paid a cash dividend of $10,000. When we paid it out, that's a decrease to cash, a credit to cash. So that's going to be negative 10,000. Okay, so our cash provided or used in financing activities is 490,000. Cash positive. Okay, so it's cash provided by financing activities because it's a positive number. So now we're going to add up the total increase or decrease in cash. So we're going to add cash flows from financing activities, from operating activities, add in investing activities, add in financing activities. We had a total increase to cash of $883,500. Now I'm going to do my reconciliation. I'm going to add in last year's cash balance, which was $1,509,000. And when I add my increase in cash to my beginning cash balance, I'm going to add those two together, I end up with $2,392,500. So I'm going to check my work. I'm going to go back to my financial statements, and my cash balance at the end of 2019 was $2,392,500. So they match. So I've done a good job, and that's excellent. Okay, so make sure you look at the discussion question, do the homework, but this concludes the lectures for the Statement of Cash Flows module. So we are officially done with our lectures for this semester. So thanks for hanging in with me. I hope they've been somewhat interesting. And yeah, we'll see you on the next one. All right, bye.